we go onto the Delta engine, this is one of our tools that we have, right? And what you can see, it shows the candle, the closes, and the Delta. And looking at this now, if you look at 2 weeks ago, right, the volume, Delta volume, so that's people actually shorting, was 356 million. Now, if you look at 2 weeks before that, it was 100 minus 142 million. So then you're thinking to yourself, hang on, this is even worse now. It's a minus 356 million Delta, and we made a close lower than 2 weeks ago. So we're just going to go down. But what people don't realize, the actual volume of this candle has been, and I'll show you in another chart here, right? The actual volume was 19 billion. 19 billion compared to previous 3 or 4 years. It's been the lowest volume. So what does that tell me? You have to then kind of analyze it and think to yourself, are these whales shorting 19 billion? Here it's at 416 million, right, on this chart. So are whales unloading 416 million, but with only 19 billion volume? It doesn't quite make sense. Whales would be, they're the ones who drive the market, right? So they would be shorting this with a lot of volume, more than 21 billion, right? Now you think about this. So this kind of volume, 416 negative Delta on this chart here, and look at the candle. It's not that deep. 416 should, that was 70, and that was a kind of similar sort of candle. So you would think to yourself, 416 million should drive this price a lot lower, but it didn't. So there's something holding price up. You can't see it, but it's limit orders, it's whales absorbing the buys. And that's what's happening here.